What's up, my fellow harmonic traders? Welcome back to Track the Harmonic. I'm your host, Lord MC. In today's video, we're diving deep into the exciting world of harmonic technical analysis, as well as discussing some crucial upcoming economic events that could significantly impact the markets next week. But before we get into the nitty-gritty of harmonic technical analysis, let's take a moment to cover some of these key economic terms you've probably heard but might not fully understand. First up, we have the Purchasing Managers Index, better known as PMI. This provides vital insights into the manufacturing and service sector's health. A higher PMI could indicate economic expansion, while a lower one could suggest economic contraction. Next, we got JOLTS Jobs. That's the Job Openings and Labor Turnover Survey. This report gives us a peek into the labor market's dynamics, revealing job openings and worker turnover rates. Next up, the most important thing of the week is the FOMC interest rate decision. This is where the Federal Reserve announces its monetary policy decisions, which could influence interest rates, inflation, and in turn the entire financial landscape. So it's going to be very important to hear what Jerome Powell is going to say during that press conference. The next up, we do have non-farm payroll report, often referred as the NFP. This is a crucial indicator of economic health. It tells us how many jobs have been added or lost, reflecting the nation's employment trends. Connected to the NFP is the unemployment rate, which, as the name suggests, reveals the percentage of people without jobs in the labor force. So it's a vital indicator for understanding the job market's health. And finally, we have continuation into earnings with the most anticipated earnings release of the week, which will be all eyes on Apple. So now that we cleared the fog around these essential economic events, let's dive deep into the harmonic technical analysis. So if you find this type of content valuable, don't forget to give this video a thumbs up and hit that subscribe button below, as it does help out the channel. Before we get into the charts, I want to preface by saying I am not a financial advisor. None of the things I say in my videos is ever financial advice, so question everything, do your own research, and come out with your own conclusion. So having said that, let's jump right into the charts. Jumping over to the SPY here, so the market obviously had a very red week. You do have this dragon pattern, this bearish dragon pattern, as well as a bullish crab pattern calling out for a potential reversal here, but you could actually now extend that bullish crab pattern to maybe a D crab pattern, and we'll be talking about some targets there. But right now it looks like, if I bring out my drawings here, there's still selling here, picking up potentially here for SPY, as you did manage to go as low as 409.21 on Friday before closing the day at 410.68. So harmonically, what can we expect here? One of the things that I'm looking at here is that 403.74 from that dragon pattern there. You do have three black crows currently set up here on the daily, which could imply more downside is incoming. The HSI did bounce up, but is starting to come back and curl down to these oversold conditions, which could potentially bring it down here. Bring up my drawings. There is a gap there around 407 and change. So below the oversold conditions on the HSI, you could come back down to that 403, 404 level. One thing that I'm looking at here also is there is still a bullish divergence on the SPY here, where it could get invalidated if the RSI comes below and it creates a lower low here around below 28.53. Obviously that would invalidate the bullish divergence, and you could see more downside on the SPY. If we go over to the weekly here, you can see that there is a 921 crossover to the downside with this bullish T-crab calling for target one at exactly 404. So what can we expect here? Obviously, if you go to that 404, that's something that I'm going to be keeping a close eye on. Obviously, below that, it gets very bearish. There is a gap around 396 and a touch of the 200 EMAs there around 388, 390. So one thing I do want to bring to people's attention, because I was getting some people were saying that there was a bullish flag here on the SPY here. You can see just drawing really quickly that this would be the flag that they were talking about. But in my opinion, that bullish flag is invalidated. Why I say that is because you could easily take a fib retracement tool and point out where you are in that wave. So depending on your interpretation of where this flagpole starts, in my opinion, it starts at point A here where the dragon starts, because you did push up and then you had some resistance and you came here for a low, and then you continue back up. So if I take this retracement tool from point A to the 52-week highs here, you could see that we are way below the 50% retracement. We are actually testing the 886 there at 410. We did go below that at 410.09, and every time you lose 50% of something, specifically we're talking about the flagpole here, that is no longer a bullish flag because you gave up 50% of that wave. So you could argue and say, hey, Lord, maybe you take it from the March lows here. So we'll start the flagpole all the way here, and you could still tell that it's below 50% of this wave. This is not bullish in my opinion, because if you give up 50% of the wave, you're below, you're currently at the 618. So that is bearish in my opinion, which could imply that there is a potential just creating lower lows and lower highs for a potential bear market. And then in the most extreme case here, more conservative, you could say, hey Lord, well, let's extend this whole push down from the 52-week lows all the way down here at 349 and change where it hit to the 52-week highs. In this area, we're currently testing that a 404.32. That would be the 50% retracement of that pullback, right? So if you're looking at this from a more macro, from the October lows to the 52-week highs, that is quite significant. This is why I'm watching this level at 404.32, because if you lose that, that's 50. You basically are invalidating 50% of that move, and you could be entering a bear market. The VIX is denoting that as well. It is approaching, I think it went to 21 and change, close to 22, and I do think that around 23, 24 on the VIX, it's considered bear market territory. So it's very close. This is why I'm going to be keeping a close eye at that 404.32, and we're only roughly around $6 from that. So I do think there's a potential opportunity there to go test that level. And if you do test that level, I think it's going to be bad for the SPY in general, in the market in general, because you might be creating lower lows and lower highs, and you might be actually falling below 400. So this is very important level to watch out for SPY. Obviously, things can get accelerated depending on what the FOMC decision is. So definitely keep a close eye on the SPY here, because yeah, it's at key levels here. So just be careful. Jumping over to the triple Qs here. So the triple Qs finally hit PT1 off of the dragon pattern. The dragon pattern had PT1 at 341.61, and on Friday you did close below 345.31. So Thursday you had the close of the 200 EMA, and then Friday was supposed to be an attempt to test that level to see if it could still hold on to that. Unfortunately, it did not. I know it's hard to tell, but trust me, the 200 EMA is at 345.32, and we closed at 345.31. So what can we expect here, harmonically speaking, for the triple Qs? You do have this bearish bat pattern. Next level, if it doesn't hold, is 337.20, just right where almost the gap there is. There is a gap there at 333 and change. So if it does not reclaim these levels, I do think there is more downside, as the HSI still got some room, as well as the regular RSI. If we jump over to the weekly here, the weekly currently has an alt bat pattern where you are having the EMAs come back down for that 921 crossover. You could argue this is a shooting star, and it almost tested the 50 EMA on the weekly here. That is around 341 and change. You do have what's setting up for a type 1 reaction after this alt bat pattern was generated. That type 1 reaction would be completed at target 1 here, where the 50 is at SMA is at around 327.55. Obviously, you got a lot of room here on the RSI and the HSI as well. So you could get a reversal level here, or reversal candle around target 1 if there is more downside. So definitely keep an eye out on the triple Qs. To be bullish back again, you need to reclaim the 200 EMA, 347. And so far from the EMAs here, the last time it tested the 9 EMA, it came back down. So there could be a situation where you reset a few things and you come back up here to 350 and change the test on 9 EMA. But as of now, right now, that is a level of resistance for the triple Q. So definitely keep an eye out on the triple Qs. Jumping over to the Dow Jones here. So the Dow Jones had a very bearish close on Friday. It did close at 324.19. It currently does have this bullish bat pattern where you failed to hold above XA here at 329.34, and you have a similar setup to SPY here with the 3 black crows, and you do have a bullish divergence, which could also get invalidated here if you drop below that 24 range. Harmonically speaking, the next level to the downside I'd be looking at is that hop level at 321.47. There is a gap there around 322 and change. If we jump over to the weekly here real quick, you see that there is a potential 2050 crossover, right? So it is now 1, 2, 3, 4, 5 weeks in a row where you are closing below the 50 SMA and creating lower lows. So it looks like it might have a shot at attempt to touch that 200 EMA and SMA that's roughly between 318 and 315. The HSI still has some room side to the downside for that oversold condition, as well as the RSI has a lot of room. If we go over to the daily now, you do have a death cross approaching. I'm not sure if it's crossed yet. I know it hasn't crossed, but the EMAs are about to have that death cross with the SMAs also approaching. Now, like I've said before, these could be lagging indicators and the move could be already be playing out for that death cross, but if it's not, then you could definitely have more downside here. I'd be looking around, if it loses hop, to go back down around 312 and change, maybe even to 310 as the weekly there. We're kind of below that level there. As you could tell here for the Dow Jones, you kind of tend to lose the 200 EMA. You wick down. There is a gap all the way here at 284. I don't know that it will get there, but it looks like every time it tests the 200 EMA SMA on the weekly, it tends to come down a bit, but it reclaims it and it goes and creates a higher high. So the Dow Jones, very important level here, so keep an eye out on the Dow Jones. Jumping over to IWM here. So IWM, in my opinion, looks a bit bearish here. You did generate a deep crab, I believe here was on Monday. Yeah, Monday the 23rd, where unfortunately you are not reversing here for that type 1 reaction. Instead, you are coming down here to test hop at 160.42. You're currently at 162.21 on Friday's close, and the volume is there to support this move. You're still getting volume to the downside. So what can we expect here? As the similar to the Dow Jones and SPY, there is a slight divergence there, a bullish one, where you could actually start playing potentially for that reversal. But if it doesn't, if it comes back down to 27 and change here off the RSI, then invalidates that bullish divergence, and there is more downside here. One level that I'm watching here for IWM is 160. If it doesn't hold this level, then I do think it can get very interesting for IWM real quick, as there is a gap there around 156 and change. If we go over to the weekly, I've been talking about this in my previous videos, that this is a bear flag, right? Where PT2 here off these 3 touch points here, the triple top has been the top of that trend line for the bear flag, and this is, so CD here was the bottom of the trend line for that bear flag. And you could argue this is a triple top here and a triple bottom, right? You had 1 touch here, 2 touch, and then 3 touch, and you're currently losing that level. So if that bear flag is playing out, you could extend that trend line from the top of the trend line of the bear flag to the trend line below here, and that could take it back down to the mid 140s. So you do have OPR off of this white swan there at 149.32. Below that, you do have this bat pattern from a previous harmonic level that you can go down to 138, as it never really, during this time period in 2020, it never came down to for that type 1 reaction. So volume is there to support on the weekly. You also have a death cross approaching with the 200 the 50 approaching the 200 EMA on the weekly. So like I've said, this could also be a lagging indicator, and the move could already be happening, because there is 1, 2, 3, 4, 5, 6 weeks below the 200 EMA on the weekly, and you continue to create lower lows. So the HSI is completely oversold, as well as the AMP RSI. The RSI is still not below 30, so you could really see some more downside here on IWM. And also depending on if that is a lagging indicator for that death cross, because it does not look good here for IWM. It really needs to reverse here. Otherwise, yeah, it's not going to be great for IWM. So definitely keep an eye on IWM. Jumping over to XLF here. So I've been saying in the Discord that the banks were starting to smell funny again, and lo and behold, exactly a bit bearish here for XLF, which is the financial sector. You could tell you did generate a bat pattern where you failed to stay and hold above XA there at 31.97, and is now looking like it wants to go to that hop there at 30.89. The RSI is oversold with a slight bullish divergence as well, but that could be also invalidated. There is a gap there around 31 and change. So if XLF is not able to hold back above XA here, then that's the next target I'll be looking at, is at 30.89. You're currently back at these key levels again with that bank run happened. So if it doesn't recover here, things could get quite interesting again for XLF. If we jump over to the weekly, you do have a bullish bat pattern as well as a dragon and a white swan. As you can tell here, XA is calling for 30.29 and then as low as 27.01. The HSI is completely oversold here, so you could generate a potential reversal back up here. You would obviously need confirmation and a reversal candle with high volume to generate that HSI arrow. But right now it looks like it's already 2 weeks in a row below the 200 EMA there in SMA. So we'll see what the banking sector has for us. As you know, we got some news with JPM selling, I think it was over 1 million shares, 140 million if I'm not mistaken worth of shares. So definitely keep an eye on an XLF specifically. I'd be looking at the regional banks. There's a bit of bearish things going on with some of these bank stocks, so definitely keep an eye on the financial sector. Jumping over to XLE here, the energy sector, you do have this bearish Gartley pattern playing out right now. Interesting to see that the energy sector now lost to 200 EMA and SMA here, where you close at 84.63. You're completely oversold on the HSI and the AMP RSI. You still got room on the RSI for more downside. Maybe you complete that type 1 reaction to target 2 there at 81.77, and then you reverse. Or you could reverse here for on Monday, maybe into next week, to retest that 200 EMA. You do have a potential here. I think you do have a 2050 crossover to the downside on the daily, so that could still have some more downside, like I said, maybe to that target 2. If you're able to hold above the 200 EMA here and reclaim 85.73, you could get a potential reversal and you could start heading your way maybe to 90.57 at XA and then back up to hop at 95.60. If we go over to the weekly here, there's quite of a bearish candlestick close here for the weekly. This shows the spread of the candle compared to the previous close, obviously similar volume. But we'll see if there's more continuation, as it almost came down. I think it did test the 50 EMA. It did. So if there is more downside, there is this bearish crab pattern where you have yet to complete the type 1 reaction. The type 1 reaction is obviously at 67.27. I'm not sure that it can go there, but you know, anything is possible here, especially with what's going on in the Middle East and oil and in general. So definitely would be bearish. If you lose a 50 EMA here on the weekly. I do have a level there at 82.51, which is a key level there that I'm watching. If it loses that, then there is a gap there all the way down to 70s, and obviously the 200 EMA there at 71 and change. So definitely keep an eye out on the energy sector. Jumping over to Apple here. So Apple does have this dragon pattern currently playing out where it did hit PT1 finally at 167.06. You did manage to close or test 166.25 here, which is a line that I have that is a very key level for Apple to hold. As you can tell, it wicked from that level, and on Friday you managed to close above it at 168.22. You are below the 200 SMA for the second day underneath that level there. So what can we expect here for Apple? Obviously they have earnings this week, this coming week. So if it manages to lose 166.25, the next range I'd be looking to see if it tests or trades in between is that 166 and 156. Obviously, I have 156 here as a capitulation level for Apple to come back down to the 140s, where the dragon pattern is calling for PT2 there at 143.90. Obviously, with earnings, you can see like Amazon, Microsoft, and I believe Google beat expectations. More so, Microsoft beat expectations, and it was a bullish earnings up until the next day, where you managed to, I think Microsoft gapped up and it filled that gap down the next day and is now back down. So it's not, a lot of these tickers are meeting expectations and beating expectations, but the market is picking a direction, in my opinion, right now to the downside. So Apple, obviously, them missing on earnings or anything that could definitely have an impact on the broader market, as it holds 7% of the SPY. So it's very important to see what Apple is going to report for earnings. To the upside here, obviously, to be bullish, you need to reclaim all the way to terminal at 177, in my opinion. Otherwise, you're going to find some resistance here. If we go over to the weekly, you did manage to come down and almost test that 50 SMA there, and you do have a 921 crossover. There is a bullish bat pattern, and T2 is at 160.49. You actually never came back for a type 2 return off the completion of the pattern here, right? So this could be also what looks like a inverse V, and depending if it plays out, you can maybe see target 146 where all that chop there all that action was there between that 156 and 146, where you finally managed to break above it and create a higher high. So on bad earnings or bad expectations, guidance or anything, I could maybe see that scenario play down again at around 146. So definitely keep an eye out on Apple. So jumping over to Microsoft here. So I mentioned Microsoft beat expectations on earnings. You see that gap up, and then on the next day, on Thursday, you managed to fill that gap, and on Friday, you closed at 329.81. Looks like a shooting star here. So what can we expect here for Microsoft? There's a potential setup here that people were talking about, and I do see it potentially there. This inverse head and shoulders, right? You have the shoulder here, the head here, and potentially the right shoulder is currently being generated. So harmonically speaking, you did lose the HSI on Friday, the midline to the downside. So what can we expect here? If we go to the weekly, you can see that that is a inverted hammer candle, shooting star. You do have a shark pattern here where you're still holding above the 9 EMA and the 13 EMA. The 21 EMA has actually been a level of support where it does come below it, but it reclaims it pretty quick. So if it manages to lose a 21 EMA, I'd be looking to see if it comes down to that 305 level. Obviously, maybe it's some touches here around 311, 310, but you do have a potential type 1 reaction coming in here. If it does go to that target 1 at 290.11, that would complete the type 1 reaction. Obviously, if it finds support above here and it plays out that inverse head and shoulders, you could see this go back above 334 and then 351. So definitely keep an eye on Microsoft, as it's still trying to, it's still kind of a little bit of a indecision here and trying to stay above the 50. So there's a lot of things going on here with Microsoft. So definitely keep an eye out on Microsoft. Jumping over to Amazon here. So Amazon beat expectations on earnings. It gapped up on Friday. You did generate this inverted hammer candle where you had resistance there at the 50 EMA, and you did generate a shark pattern for Amazon. So right now it is, the HSI is approaching that midline there. So if you manage to break above that midline, you could go for a type 1 reaction at target 1 there at 132.11, which will be the test of the 50 SMA. Obviously, going into the overbought conditions, I do think you might come up all the way up to target 2 at 142.72, where there is a gap there around 135. To the downside here, if you manage to find resistance here and not reclaim this level here, you could come back down, maybe have similar setup there with Microsoft where it gapped up and then you filled the gap to the downside, which would be kind of bearish there. You come back to terminal and then maybe retest 117.35 here where the 200 SMA is at, and then go to hop there at 113.77. Obviously right now the indicators are looking like the harmonic indicators are looking like it wants to push up, but we'll see if there is continuation to the upside. On the weekly, you do have this bearish bat pattern which generated an HSI arrow to the upside off of this hammer candle on the downtrend. So this is high volume on the weekly. Obviously earnings had something to do with that, but if this is a hammer candle on the downtrend signaling reversal, then it looks like he wants to come back up above 130. So I'll be looking at 130. If you manage to break 130, then you can see 139 off the weekly and then hop down the line at 155.75. Obviously a lot of things have to happen for that to be the case. Maybe for that to be the case, you have FOMC being bullish for some reason. They might say they pause or a cut or whatever they're going to say could definitely help Amazon to go to these levels. But we're at key levels in the market, so we'll see what the FOMC rate decision is going to say. So keep an eye out on Amazon. Jumping over to Tesla here. So Tesla has 6 consecutive days below the 200 SMA here. 1, 2, 3, 4, 5, 6. So what can we expect here for Tesla? It's kind of a bit bearish here for Tesla. It's currently at 207.30 off of Friday's close. The next level harmonically I have here off the bat pattern is at 177.25. I do have also from a previous level there at 177.12 where it can get very interesting for Tesla. Below the 174.44 you do have the gap filler on 147. Right now the EMAs are approaching down and you have a potential death cross incoming. That could take some time to play out. So to the upside, what I would like to see for Tesla, if it's going to find support here, is obviously reclaim the 200 SMA around 217 and get above 223.85 where target 1 is at. Ideally, to get bullish again for Tesla, in my opinion, you need to be above 253.80. Otherwise, I do see more pain incoming here. If we go over to the weekly, you do have this bearish bat pattern where you managed to just stay above the 200 SMA there, but it is a shooting star here on average selling volume. So the next level I'd be looking here for the bat pattern, because you did reject off the HSI midline and it might be approaching these oversold conditions, is the retest of the 200 EMA on the weekly, which is around 196, and target 2, similar to the daily pattern there, is calling for the same target at 177 and change. So to the upside, like I said, you have 233.85, maybe get that gap fill around 241 and then 253.80. So definitely keep an eye out on Tesla. Jumping over to Google, oh boy, Google had quite the interesting week with them missing on earnings, specifically their cloud services. So you did manage to not fill this previous gap here. So what can we expect here? It did manage to close above the 200 EMA. The HSI still got some room to the downside, as the RSI never reached the oversold conditions. So what can we expect here for Google? I'll talk about the upside here first. So the next level I'd be looking at is to reclaim 124. Maybe you finally fill that gap there, and then reclaim target 1 at 129.35. There's a huge gap that it left, obviously, on earnings here. So you definitely need a lot of things for this to play out again to the upside. You're actually approaching a 2050 crossover. So you might maybe consolidate here, fill that gap, and then do a corrective move before you maybe come back down to enter these oversold conditions again. If we jump over to the weekly here, you could obviously see that it's a bearish close for the week, as it's a high volume from this bearish bat pattern where XA was resistance now. So you did manage to close below the 21 EMA and almost retested the 50 EMA on the weekly, which was around 120 and change. And target 1 here to complete a type 1 reaction for the bearish bat pattern is at 117.12. So the HSI is looking like it wants to come back down here. So if it ever goes to these oversold conditions, I think there's a possibility there for target 2 to be completed, that which is at the test of the 200 EMA. So definitely keep an eye out on Google. Jumping over to Meta here, no current harmonic pattern on the daily still for Meta. I think there might be a potential one forming, but on earnings they beat expectations and it came gapping down, and it looks like it wants to just I think it did complete the gap, if I'm not mistaken. Yeah, it completed the gap. So as you could tell, the previous times it lost the 50 EMA and SMA, it has reclaimed, and it looks like it's heading up over again to that $300 range, where it's looking like it's finding support there. Obviously a rejection off the 50 EMA and SMA here. You could come back for a lower low and test the 200 EMA on the weekly at 261. I'd definitely wait for confirmation for that to happen, because every time it, like I've said, it comes down here, it flips it generates a reversal candle and it continues back up. So if it reclaims 300, then you can see another shot there, attempt at a 320s, 330s. Otherwise, if you finally get resistance, like I said, you might come back to test the 200 EMA on the weekly. Off of the weekly close here, that is a potential hanging man on high volume. You did cross the HSI to the downside. Did manage to wick down below the 21 EMA, but found support above it. So like I said, the next level I'd be looking would be the 200 SMA, which for the most part a lot of takers are coming down to test on their daily, weekly, their 200 EMA and SMA. So the 200 EMA here would be 246. So definitely keep an eye out on Meta. Jumping over to NVDA here. So NVIDIA is at key levels in my opinion here, and everybody is talking about the head and shoulders pattern. So this could be a trap situation, but we'll talk about here with the levels that I'm looking at harmonically speaking. So the next level here from the bat pattern I'm looking at is to complete that type 2 return to hopper there at 389.74. There is a gap there around 396 and change. Obviously it lost the key level there at 411.30, so if it is not able to reclaim that level again, then I do see more downside for NVIDIA to go to that hop level and maybe test the 200 EMA at 366 down the line. If we're talking about the head and shoulders pattern, if you know how to take the target levels, I'm not going to go over in this video because that's takes another video for me to cover that. But if you know about where to take profits here from where the potential target areas off of a head and shoulder pattern is, this potentially is calling out to enter the gap here and almost fill it. I do think if it plays out that head and shoulders, I do think it's around below the 200 SMA or 320, somewhere around there. So that's only if the head and shoulders plays out, right? So if we go over to the weekly, you did manage to close below the 21 EMA there with the shooting star. Obviously the weekly has this bad pattern where you kind of never went for a type 1 reaction, but a lot of things need to happen for that to be the case, to go down to target 1. Anytime NVIDIA here comes down, as you could tell here, it lost a key level, right? It did close below here before below the open there from August here. So if it's not able to reclaim this real quick, then I do see more downside. But if it manages to reverse here, you can see how anytime you hit these levels, prior to this level here, you went all to all-time highs. This period here where you reclaimed 409, you went all the way up to 476 and change. So if you're able to find support here, things can get interesting back up and bullish for NVIDIA. So definitely keep an eye on NVIDIA, because if it doesn't, then there might be some downside in them NVIDIA losing that key $400 range. Jumping over to Netflix. So Netflix did generate a bullish bat pattern here, where it is currently at below target 1 here at 398.31. It closed at 397.87 on Friday, and you generated an HSI arrow on Thursday as it was oversold after being bullish, beating earnings and expectations for their earnings. So what can we expect here? If it doesn't hold this area here, it's currently around above the 50 EMA on the daily. If it manages to lose that level, then you could have a similar setup like I've said to Microsoft. Obviously on Microsoft, it went to fill the gap the next day, but this time for Netflix, you do have a bit of support here. But if it doesn't manage to hold this level, then you could come back for a type 2 return back up to XA here at 347.33, which would fill this gap that it left from earnings, and currently does have a gap there below XA here around 341, 342 and change. Obviously below that level, you come down here to hop at 307.71 for a complete type 2 return to hop. The HSI is approaching that midline. If it does that, I do think you might have some support at 379.05. So if you fail that, then obviously you can see these numbers below. To the upside, obviously you want to stay above target 1, reclaim target 1, and then go to target 2 there at 431.42. Above that, then you have a huge gap to fill around 505. Obviously the key psychological level are at $500. Off the weekly, looks like a shooting star on an uptrend resistance off the 200 SMA. You could also argue the case that this is a potential inverse cup and handle, which could be very bearish for Netflix coming back down below the 200 EMA. If this plays out, this inverse cup and handle, you could see it go back below 300. So definitely keep an eye on Netflix. Jumping over to Bitcoin here. So obviously there's a lot of commotion going around right now Bitcoin with the whole BlackRock Bitcoin ETF. So what can we expect here harmonically? You did have this bearish bat pattern where you went way above hop. I think the highest was at 35.1K. So what can we expect here for Bitcoin? What I would like to see here, because if I go back to this trading range back in 2022 of May, you kind of had this selling pressure, right? So you haven't really established a trading range here. What I would like to do is for it to establish some type of trading range where you could create a level of support. What that would allow for Bitcoin to do is for all these RSI indicators, especially on all the time frames, on the macro time frames, they are a bit overbought. So that would allow this to come back down to these indicators to come back down and potentially wait out for the next breakout, whether up or down, right? So you could be forming here a potential asymmetrical triangle. Maybe you start coming down for a bull flag. It's too early to tell. What I would like to see is for it to test hop there at 30.9 to see if there's actually some support there. You do have a golden cross on the SMAs. Obviously that could be a lagging indicator, and that move could have already happened, obviously on this crazy push that it had. But who knows? There still could be more upside. I do think there's more upside to around 40,000 potentially there. The HSI did cross the midline, so we'll see if there's support. That might be supported around the 90 EMA. I do think if you reach these oversold conditions, you could test the 21 EMA where hop would be at. So if we go over to the weekly here, you did have this dragon pattern where you're above OPR here at 32.7K. And obviously you did generate an HSI dot with increase in volume pressure, but the RSI is almost approaching overbought conditions there. So you still might have some upside there. Who knows, but we'll definitely have to keep an eye out on Bitcoin. But that's all I have for you guys. If you guys want to catch me streaming, I do stream on Twitch from market open to market close, Monday to Friday. So you want to catch me there. The link to my Twitch in the description box below. But other than that, I hope you guys have a good rest of your weekend, and I will see you guys on Monday. Take care, everybody, and peace.